Yeah, what is good, everybody? Today I got a pretty in-depth analysis of the overall markets. You're going to see a lot of interesting TA that you probably haven't seen before, unless you've watched my channel before. You'll see some of this stuff. It's pretty similar. We're going to be looking at the NASDAQ and QQQ, which I usually don't go over, but there are some interesting things that I'm seeing in those, so that's why I'm going to be talking about them. And we're just going to get into it, so make sure to show the video some love, give it a like and subscribe, and let's get into it. So, to start off, we got oil here. Oil, very, very, very interesting. So we called the top. We knew when it was going to drop. Uh, but it really blew past where I thought it would stop dropping. I had expectations that it would hold around 71. And I didn't say it would. I would just say that that's where I would like to see it drop to and then continue upwards. But it did this absurd stop loss hunt. Like, this is 68 down to under 64 and then all the way back up. That's really nasty. That definitely took out a lot of people, stopped out a ton of people, made people go short. So this is something you always see with commodities, really massive traps like that. So very interesting. Just from a glance, the C wave is now equal to the A wave, but it went below that, so it can't really be a correction unless it's a messy spot. Really what I'm just going to say is it's definitely a good spot to watch it now. Kind of see what it wants to do now because I'm not sure what it's going to do from here, especially since we made that new low. This can't really be an ABC unless it's a pretty complex structure, which would be an expanding correction, but this would throw me off as well. So really messy spot with oil. The fact that it didn't hold this region makes me question a little bit on how if it can be bullish or not. And with the overall markets, with what they're doing right now, if the market decides to enter into a really bearish state, which is definitely really turning into a possibility, this could be the start of oil just absolutely collapsing. Now, I'm not saying that's what's going to happen, but the fact that we made that new low is not exactly what I was expecting. So we have a gigantic bullish divergence on oil though, triple bullish divergence on the daily. So that's definitely in favor of the bulls, but very interesting spot. This could also be an enormous head and shoulders. It's an awkward state for oil right now, so it's a good spot to sit back and watch it. Now, natural gas, it did what we were expecting. It filled that gap, but it went a little lower than I would like, but it definitely could have just been testing liquidity down here. So natural gas, after months of just falling pretty much every single day, it's finally been basing and making a floor and just kind of testing lows and then bouncing back up. But it's below that support that I kind of wanted it to hold, which I also did say this would probably happen to fill that gap because natural gas always fills its gaps. And there's one up here, so don't forget about that one. That's a pretty big gap. But I would like to see it recover back above this region pretty much like right away, like on Monday. I would like Monday to be a green day. Although we do have a gap here, so maybe we come fill this gap and then run up. The point is I would like to see this region reclaimed, and then we'll just kind of wait because I would like to take another trade to the upside. We played this entire drop down, and we got out around here, I think, in the golden pocket. So we're just waiting on the next big trade. DXY, I'm not really liking this price action because not really too much to read from it. When you break out of a channel, you would really like to see something like a turn back up, or a kind of like a reversal in the direction it's been going, and we broke out of it and it's just going sideways. So if it doesn't, it needs to be soon. If it doesn't start turning up, I don't know if I'd be bullish on it. And it's really getting dangerously close to these lows, so those lows don't hold. It's coming down into this region of previous congestion, which is under 100, 99, whatever this is. So keep an eye on these lows. Apple, very interesting. So we're getting closer to my price target, which is around 177. Now, since we were down here, we were looking for, I think it was 160. It was this gap right here, which has been filled, and then it stayed above, which made me question, like, okay, maybe that isn't the top. How much higher could we go? And so we looked at the fibs, we looked for higher gaps, and we have a very small gap here which got filled, as well as that fib target at 177, and this volume node where it's going to be really, really difficult to get over this region, and I don't exactly think it's possible. I'm just kind of looking for some more trendline resistances. There really aren't any trendline resistances, descending trendline resistances. It's just those previous highs, a lot of supply. I don't think Apple will be able to. This is going to end at some point. It can't just keep going. It's going to drop extremely hard very soon. And just besides the structure, like this wedge structure, this is also just kind of a recurring pattern. There's this crazy melt up, then a big drop, crazy melt up, big drop. So at some point, we're going to see Apple get this major downturn, but we just have to let it finish its move. And of course, I can't just, no one can really say, like, it's always easier in hindsight to say, yeah, that was the top. So I'm not really sure where this top is going to be because there's several reasons or several areas of incentive to stop, especially 177. That's really where I have my eyes. So if we can get up to 177, I'll start thinking about short positions, but I wouldn't take it instantly. I would definitely be waiting. You could see some sort of like trap or stop loss hunt. You can see back here we made that high. You come back and make a slightly higher high to stop those shorts out, and then you drop. So you got to be aware of like all these tricks it could do. But 177, that region is really going to be an area to watch it to stop, as well as where it is now, 172. That's really the most protruding area of this volume node where the most sellers are going to be coming out. So just this region is where I would probably be looking for a top. Tesla. So very interesting. Our overall structure is playing out. Since we were like back here, we were expecting the structure to probably get down to around this gap fill, and there's a lot of reasons where it would be pointing to one last drop, one more low, fill that gap. That has to do with these fib extensions, the gaps, and Elliott wave theory. So I'm going to start off with Elliott wave theory. So what I can see here is it's a pretty clear wave development that we're in right now. Let me just make it a little less messy. So this is the overall structure we're looking at, this ABC. And within an ABC structure, the A wave will either be 3 or 5 waves. The B wave will always be 3 waves. And then C wave will always be 5 waves. So if it's a C wave, it has to be 5 waves. And there's only 3 so far, which would mean we do have one more low coming. Or at least it's extremely likely because I can't really see any other count that's clear. So the criteria for this to play out is that wave 4 cannot go more than 50% of wave 3. So if we get above like 172, then this probably won't happen. And I probably miscounted this somehow, which I'm not sure how I might have miscounted this because I don't really see 5 waves. It's a pretty clear development if you ask me. So if we get above 172, we're probably not going to be coming down here, as that would invalidate the rule of the 4th wave and then the transition into the 5th. But if we do stay below this, that target's going to be 146 to this gap down here, which is 133. So that would be the area I'm targeting, this golden pocket, as well as the gap, and then the smaller gap. So it's just kind of this region that I would be looking for price to get into, but we can't really go much higher for this to be the case. So keep an eye on Tesla. This could be a really easy trade, really extraordinarily low risk, pretty decent reward because it only has like your threshold is only like $30 to the upside, whereas you're looking at like 20 to $40 of downside. So keep an eye on Tesla. That big level to watch is like 172 to 173, as well as the low of wave 1, which wave 4 can't go into. So if it gets above wave like 176, then just I would probably ignore this count, or at least give it some time to settle down and kind of figure itself out before trying to take another trade. So just keep an eye on this region. 172 to 176 is where you would have your stop loss if you're short. Now Microsoft, we were looking at that gap fill, and I did not think it would really be able to do it this quickly. But earnings, I mean, I always underestimate these earnings, and I mean, it just rocketed to the upside, and that was pretty interesting to watch. And in hindsight, it's not that surprising, as we did have that gap up there, which just got filled, and that was really the last area of price I was looking at. Now, if Microsoft seriously wants to go insane, there's this illiquid gap up here, as you can see. So before I draw this out, I'm going to explain what I would expect this to look like. So this is going to be, I'm going to draw this volume node, and what you should see here is very low volume in this region, so it's just going to be a big price gap like this. So I'm going to draw that out from the peak down to the bottom or whatever. And so yeah, very liquid, as you can see. So if we get up into here, we might drift right through this and fill this. It's really hard to kind of make a distinction of what would happen, because there's not any price above this that's an access incentive to get to. So it's kind of like uncharted territory. When you're up here, it's just going to be a lot of supply. Well, there's not even really supply. It just kind of melted through the area. I mean, unless you're considering this region, you'll see a little more volume come in. Not sure what. Oh, that's the line. Give me a sec. So here we go. So this should give us a little more volume, as you can see, but there's definitely still that volume gap. So right around here, if it really wants to go crazy, you're looking at 336, that region, and then above that, it can't do this forever. So we're going to see this move probably come to an end soon, but it's an insane market. I'm also looking at the MACD. We've topped here three times in the past, so if the MACD starts getting above this, I mean, Microsoft might pull an Nvidia where it just kind of keeps melting up. But this is already an insane move. So I think we're going to be looking at a top on Microsoft in the coming weeks. Just keep an eye out for that. Biotech. So we said when we were dropping, I said we were going to get a move back up into this resistance. That's what we got. And then I pointed out this gap here, which I said is going to get filled, because we're not going to break this resistance on the first try. So I said this is going to be probably like a free 15% move. That's what it got. We filled the gap. And then I said, now we're just going to have to see what it does at that resistance. And if it breaks it, you could see some more nice upside back into this range, which if we get back into the range, make sure to take advantage of it, because these moves are not small. These are like 30-40% moves from the bottom of the channel to the upside of the channel, and then the same thing to the downside, which you trade with the inverse ETF, which is Lab D. This is Lab U, the inverse is Lab D. So on XBI, you're coming into a massive resistance here, so I really would not be surprised to see some sort of pullback. You have a gap here, so yeah, I would expect to see a pullback. But if it manages to get through this line and like really hold it, I mean, who knows? It could go crazy. And if that happens, the trend line I would be watching is this trend line. So if we hit that trend line up here, without any cooling down, I would be looking for a short. I would definitely be looking for a short. So I'm expecting some sort of pullback off of this trend line, as it's a pretty big, it's a pretty big line. Yeah, a lot of momentum here though. So keep an eye on some sort of pullback. I would definitely be expecting that. Now for semiconductors, we hit that bottom trend line, and then we got a nice bounce, and it's a very awkward structure here. There's not really anything clear, but there is this descending trend line, which, I mean, this line is kind of difficult to interpret what I want to think about this, because previously I was thinking this might be a wedge and we would break out from here, as you can see with that line. But it broke to the bottom, which that doesn't happen very often. It's not that common. But we did, but we got saved by this trend line, and then we bounced. So we could break this trend line and go higher into some of these resistances. So again, this is just really messy. We're just waiting for the massive, massive break of this trend line. And when that happens, there's going to be a lot of blood. Because breaking this region will also invalidate this 5-wave structure up towards 500. So if that happens, it's not looking great for, well, if we break this region, it's not looking good for bulls, because you're going to see like pure death, nothing but downside. So just kind of waiting for this to make its move. Yeah, we'll just see what it does this week. The VIX being really confusing here, not really giving us much like direction at all. It's just oscillating around this trend line, which it's not really telling us anything because it made that massive drop and then jumped all the way back above it and then came all the way back down pretty much. So VIX really not telling us much. We just kind of have to see what it wants to do with this trend line. Yeah, it's hard to read right now. That's all I gotta say. And then on to SPY. So actually, first I think I'm going to talk about the NASDAQ and triple Qs first because just get this out of the way. I have more to talk about with ES. So first off, I want to point out the ADX on NASDAQ weekly. So when this white line is under 20, that means the market is in a like a non-trend period, or it's just I guess like consolidating or sideways. There's no trend, and when it's above 20, it's in a trend. And then I don't want to get too in depth in this, but what you really want to be paying attention to is this white line. If it's above or below this purple line, which is 20, and that indicates if it's ranging or not, so or trending or not. So it's starting to move back above 20, which would indicate that it might be moving into a period of trend. And this, I mean, it wouldn't really make sense for the trend to be up from here, right? I mean, that would just mean like the trend is just up. And look at this. It's like, it's basically just been kind of going vertical, but it's in a wedging structure. So this structure is pretty similar to triple Q, which I'm going to point out soon. So I don't know. I think we're looking at a downturn here soon, but it's definitely not making it easy for anybody. It's an incredibly difficult market to trade. I mean, it's just been sideways in this really awkward range with these fake breakdowns. Then you make this new high, and then you jump back down, and you squeeze back up. And it's a really, really difficult market to interpret right now. And another thing is, look at these divergences here. Price is like sort of making these higher highs, while MACD's going lower, the RSI is going lower. And on the daily, the ADX is below 20, which is indicating that this isn't a trend. It's like a ranging market. So likely distribution, and a lot of things are pointing to the downside. Some sort of drop or pullback, and there's a lot of incentive to move back down into these lower regions. So I think we should see a move down into these illiquid regions where there isn't really any volume or price action, like right in this region. There's a lot of incentive to come back down into here. So keep an eye out for this downside. It's hard to time this market right now, but we're gonna look at QQQ, which again, same situation. You got these, this structure is insane. This is not what you really want to see as a bull, but it could do something like this. I'm not leaving this out of the picture. You have some gaps up here, so you can see that all this stuff is in the way. You got some gaps up here, which it's crazy. I know. I don't want to see that. That would not be favorable for me. I don't really like trading continuation of moves. I really like trading reversals. So that's what I tend to do. I wait for those reversal signals. I wait for all of my criteria to be met. And right now, this is kind of a point where if it gets above this region, you could see a squeeze, but it could also be a stop loss hunt, which honestly, that's what I would kind of be leaning towards, just because of how this whole thing is set up. So it's kind of a market where you just gotta wait. Patience is really kind of ping right now. I mean, unless you're day trading, then it's not as bad, but it's really smart to know when you should wait and not trade, because this would be absolute hell if you were trying to time the top of this. Like, if you shorted up here, and then all of a sudden you get this massive bounce new high, you get stopped out, and then you watch it fall, and then you might even chase to go short again, and then jumps up again. So this is not the market where you want to be rushing into positions. You really need to just wait for the right setup. And that's what makes traders good traders. They know when not to trade. You don't always need to take a trade. And if you can learn when not to trade, that's only going to benefit you. And this is not really a market where you would want to try to be timing a top or a longer term position, because we're going to take a look at SPY and ES now. This is not really a market where you want to be betting on one direction here. Now, it would be absolutely absurd if this squeezes up higher into like 4,300, and I just don't see that happening. But with the amount of people that are short right now, I've showed you that metric of how many people are short. I think there's enough fuel for this move to just break out and run into that range. So for now, we're still in this really painful range. It's killing me. But if this is the case, this is the case. We're in a range. You just gotta wait for whatever side to break. And we've had these fake breakdowns here. Like, what is this? This is absurd. We actually did expect that reaction in the Discord, which I'm going to actually talk about quick and show you how I was expecting this region, or expecting this move. You can kind of learn a little bit of this TA if you want to learn to do it yourself, which is going to be really helpful and really valuable. But just in hindsight, it's like, this is really painful. This is absurd, watching it bounce off of 4080 like every single time it comes down here, which it's excruciating. But so we just gotta wait for this range to break out. And in the meantime, I'm going to teach you guys some of this TA that I was doing, and how I knew we were going to bounce from 4080. So first off, I was looking at these divergences. So I think it was on the 30-minute. The 30-minute. So I'm going to take this off for now. So on the 30-minute, we were getting these divergences. So you had these lower lows, while the MACD and the RSI was also making these divergences. And this is a pretty good indication that, unless you break through 4080, then, all hell breaks loose. Like, there's nothing but air underneath here. Once you break this, it is nothing but down. And support is like 3,900, so there's nothing holding it up here below 4080. So once we can make a sustainable move under here, each move down to 4080 has been unsustainable. So if we can do something where it's like, we kind of like get down here and then we start bouncing around here, then we can see that drop below. But for now, we've had like unsustainable moves down into it. We've had a wedge structure. So we need a sustainable move down into it. And then we can finally see that break we've all been waiting for to the downside. So back to what I was talking about, how I saw that move coming. There was that divergence we were looking at. And then with the Ichimoku cloud, what I saw was, so we're going to rewind in time so we can kind of see it back in hindsight. Where were we? We were right around here, I think. Yeah, somewhere around here. Doesn't completely matter, but so we get this new low, and we're deviating really far from the cloud here. So we're like around here, I think. That's where we were. So we were deviating really far from the cloud and all these moving averages, which you can't deviate from like the median. The median just being kind of all of these moving averages around here. You can't deviate from the mean or the average for like an infinite amount of time. That's just not how it works. You're always going to see the reversion back to the mean, and that's what we had here. It was just kind of making that reversion back to the average, and then it kind of overshot my expectations. But until I saw this wedge structure, that's when I kind of knew that we were probably going to see that continued upside, just because of that wedge structure here. My expectation was that we were just going to kind of keep ripping, and we hit that target, and I said lock in those profits if you're still long. And again, the number one rule, don't bet against wedges. It is extraordinarily uncommon for them to not play out, as you can see here. So we hit my target, which was like 4160, and then we've pulled back since then. We'll just kind of have to see what it does around here. But for now, we just kind of gotta wait. Just kind of gotta give it time. It's still in the range, so until we're out of this range, it's just back and forth. So I think that's where I'm gonna leave this video. All that matters, just put these lines on your charts, and that's really all you need to watch. And if you're trading in between, then whatever you're working with, whatever levels in between here, trade off of those. But the big levels to watch are 4200 and 4080. So until then, we're just gonna have to watch and see what it does within the range. And yeah, that's from this video. So if you watched the whole thing through, make sure to show it some love, give it a like and subscribe, and peace out, guys.